10-year note yields end the week moving higher. Today trading up all the way to 398, falling just short of 4%, a level that hasn't traded since August 8th and hasn't seen a considerable period of time trading since prior to July FOMC. Now, the cause of today's big rally was a stronger than expected non-farm payroll number, which blew away expectations and saw yields moving higher. Not only did yields move higher today, but we also saw Fed rate cut expectations shift. Prior to this week, we were looking at roughly 60% odds of a 50 basis point cut. But when you add in Monday's testimony from the Fed chair, as well as today's stronger than expected non-farm payroll number, those odds of a 50 basis point rate cut are now at close to zero. Market pricing in 25 basis point rate cuts at both November and December FOMC. So a big shift after what we saw heard hawkish comments from the Fed chair earlier in the week. And then we had a stronger than expected job number today, taking those rate cut odds from 50 basis points to 25, as well as moving those 10-year note yields up higher, very close to 4%. Again, closing today at 398, up 12 basis points. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You'll notice volatility closed unchanged today, which ahead of a weekend and after a big event, volatility typically moves lower. It didn't today. As yields were rising higher, volatility was higher as well. Lastly, let's talk about next week. We have, not only do we have inflation data coming out next week via CPI and PPI, but we also have auctions, a 3, 10, and 30-year auction as well. And those auctions will be priced much differently. Last month, we saw the 10-year note auction at 364. Going out today at 398 is a big difference in price there. Likewise, we will get a slew of Fed speakers coming out each and every day, likely to talk about the shift in rate cut odds as well as the stronger than expected jobs number we got today. So after a busy week, which started with the Fed chair talking about rate cuts and then ends on a stronger than expected non-farm payroll number, we see 10-year note yields moving higher, closing just shy of 4%, ahead of next week's inflation data, auctions, and a slew of Fed speakers.